I am Troy McGuire, co-founder of FinTech TV, and Taking Stock starts now.
All right, time to rock and roll on this Monday, June 22nd afternoon. 2 minutes to go or so here into the closing bell. Welcome to the Taking Stock broadcast. I'm your host today, JD Durkin. With these 2 minutes, stocks in mixed territory. Despite the oil benchmarks, West Texas and Brent crude both moving lower on the day, usually a bit of a recipe for a boost in equities. Not necessarily the tail of the tape on this Monday afternoon as we kick off a fresh 5-day trading week here on Wall Street. The S&P 500 expected to finish down 0.4%. The Dow 30 components, however, inching up fractionally, not quite in record-setting territory, but honestly, not very far off their all-time highs. The Russell 2000 is in record-setting territory at this hour with the New York Stock Exchange Composite Index also in the green, 0.4%. Real estate, healthcare, and industrials, your strongest performing sectors in the S&P 500, and your S&P 500 laggards, telecom, discretionary, as well as consumer staples. Out in the Dow, Caterpillar, JPM, UNH, strong outperformance from a few of those key names. And your Dow 30 laggard include Amazon, Nike, as well as McDonald's. The Mag 7 tech stocks are in mixed territory into the closing tape. Shares of Tesla, up 1%. Alphabet, its worst day in a year, trading down 5%. The crypto majors also moving higher. And the team from Enviri, ticker symbol NVRI, down here at the big board, set to do the honors. They'll ring the closing bell now. More Taking Stock coming up right after this. All right, and there you have it. The team from Enviri here doing the honors. NVRI down here on the trading floor of the New York Stock Exchange. Your final tail of the tape, the S&P 500 down, let's call it 0.4%. The Dow up, the New York Stock Exchange Composite Index in positive territory, and the small caps, the Russell 2000, the best of the bunch, up 0.8%. Also catching a bid, the major airlines led by American, the big banks led by JPM, most memory, most quantum stocks as well. Let's bring in our first guest. Matt Lamb joins us now, portfolio consultant here at Grand Shares. My man, come over this way. I'll have you stand right here.
Hey,
brother, nice to see you here today.
Nice to see you, man. Thanks for having me.
Listen, we're in negative territory for the S&P, but in broad strokes here, Matt, as we kick off the week, essentially at all-time highs. What have you seen with investors' willingness and their ability to shake off some of the negative headlines, keep, for the most part, pushing this market moving higher?
I would say that the market right now is calm would be a farce, but I would say it's extremely resilient at this moment. We're seeing some tremendous strength still off of corporate earnings, which has been driving strong U.S. growth behind the scenes, but it keeps on colliding with geopolitical tensions. That has been the backdrop and a lot of the cause of the volatility going around in this marketplace. But I talk to investors and financial advisors every single day. People are still optimistic on the U.S. market and are really excited to see where AI-driven investments are going to take us. And one of the things that I think is really interesting about AI is it's no longer just a NVIDIA story. We're starting to see a real broadening out in the investments, which I think is going to be more of an active selection investing market, where picking out the winners, being selective, understanding where the momentum go, is going to really wind up benefiting you over the long term.
Matt, well, first of all, it's not just the first time I've had you on the show, it's the first time you and I have met, so I'm really grateful for your time here today. Give me your take on how you're thinking about these mega IPOs like SpaceX, the liquidity, the price action we've already seen, and really how you're thinking about future names like OpenAI as well as Anthropic.
So we're really excited about OpenAI and Anthropic, and we think it's really going to be one of the times where mega IPOs are going to dominate the marketplace, and it's going to make it a little bit more selective for some of the smaller to mid-tier companies to generate some noise. So I think they're going to have to be flexible with their timeline. But if you could have seen the volume that happened with SpaceX day one, it was absolutely incredible. Returning over 9% on performance, and it was really driven by retail investing. I believe their interest was around 3.5 times what it was in NVIDIA on that day. And one thing that's really been interesting to me is, what you might know about Granite Shares is we run a lot of single stock leveraged and inverse ETFs. So day 2 of trading, which was on Monday, we launched SPAL, which does 2 times the long performance of SpaceX, and SNK, which does 2 times the inverse performance. And it's one of the first times I've ever seen where we've actually garnered more assets and more volume on the short side as a hedge. Not really because investors are calling me believing that it's overvalued or they don't believe in the story, but more a lot of them were able to get exposure pre-IPO and they're looking for a way to potentially protect their downside.
What type of retail interest are you seeing in some of these more highly levered products, not just for the broader markets, but more specifically tied to a lot of these very splashy, very exciting names like SpaceX?
Well, what's really our single stock leverage ETFs, particularly on SpaceX, have been a trader's dream. What people are looking for more and more in the marketplace isn't your standard broad-based exposure. What they're looking for is high concentrated, high conviction investments. And that's exactly what we've been able to offer. We've seen over millions and millions of dollars of volume each and every day, both on the long and short side. So there's definitely a tremendous amount of interest in it. And it's not a surprise for us. The least volatile day that we've seen in SpaceX is 350 basis points, which if you leverage that, that's 7% in a single day on the least volatile day that SpaceX has been trading. So it's definitely one of those environments that active investors are extremely interested in the leverage aspect.
All right, Matt Lamb, portfolio consultant at Granite Shares. My man, you crushed it. Come back anytime.
Actually?
It's great. Of course, dude. Actually, you really did. Dude, take good care of yourself. You're good to go. Robbie will grab your mic. We'll bring you this way. Here's some of the top analyst calls that moved the tape this morning here on Wall Street. First up, Roth upgrading ConocoPhillips to a buy from neutral, saying investors should buy the recent dip in weakness in this and other oil and gas companies. Shares up on the year 15%. Next up, B of A reiterating Apple as a buy. They say Siri is still underappreciated after the recent WWDC announcements in Cupertino. The company, the third best performing Mag 7 name year to date. Finally, Morgan Stanley downgrading steel producer Cleveland-Cliffs to equal weight. They say the risk reward right now a bit more in balance. Price target at $12.50. Shares down for the year, but up 50% off their March lows. We'll take a look at a couple stocks here, Bob, that called the New York Stock Exchange their home, and we'll start with a look at Chevron, up 0.8 on the day after a pullback of about 18% in recent weeks. Chevron just announcing it will fuel a Microsoft data center in West Texas with natural gas, all part of a 20-year agreement. Chevron shares up 15% since the start of 2026. And how about a look here at Salesforce? There's a lot of red on the screen, and that's been the story of the stock for quite a while. Down 14 days in a row, trading all the way back down to its January 2023 levels. There are concerns that the software giant cannot effectively compete, as well as some had hoped, against new AI tools. It is the worst performing stock in the Dow so far this year, down 44%. Cheddar's very own Chris Castellino now brings you part 2 of the story of one New York City startup who is implanting more brain chips than even Neuralink from Elon Musk. Take a look.
We use photolithography to manufacture these arrays. So that's etching using light. That's the same technique as semiconductor chip manufacturing. That's new to the biomedical manufacturing industry. And so we actually had to create our own supply chain. We own a fab in Texas. We have a team on the ground there with a level 5 clean room where we make this critical part of the system that previously was thought to be, impossible to manufacture at scale.
That yellow film isn't proprietary to Precision. It's called polyimide, a plastic better known for its use in satellites and flexible electronics. It's so chemically inert that nothing sticks to it, making it ideal for a brain implant. Inside the company's New York prototyping lab, we watched engineers work through the assembly process in real time. A plasma chamber creating a brief chemical reaction to help bond components together, a process that must be completed in minutes before the surface reverts. The interface doesn't just record your brain, it has to understand it. Your brain generates roughly 50 thoughts every 60 seconds. That's 50,000 to 70,000 thoughts per day. And that's where Precision's AI layer comes in, to decipher that amount of brain activity.
The system requires a little bit of calibration, so people move their arms and hands, or if you're paralyzed, you imagine moving your arms and hands in various directions. And the system records the underlying brain activity associated with those movements or intended movements. And that's what it uses to then calibrate and train the algorithm. And so that's how we correlate certain patterns of electrical activity in the brain with intentions to act.
Dr. Joshua Betterson is chair of neurosurgery at Mount Sinai, one of New York State's largest hospital networks. He's one of the most respected brain surgeons in the country, performing more than 6,500 operations. Under his guidance, Mount Sinai has become a major hub for BCI research.
The BCI gets implanted, and they don't know how to use it yet. Someone who's completely paralyzed, who has an electrode implanted near the leg area of their cortex, has to learn how to move his leg. In fact, he said, in order to move the mouse, I've got to kick my right leg out. That's how I do it. And then in order to click, I've got to stamp my foot down. This is a form of plasticity in training himself to use a BCI.
I think it's helpful to think about BCI as a communication tool. Like any communication device, bandwidth matters. What you can do with a 56K modem, maybe chat on AOL, is very different from what you can do with a fiber optic connection, Netflix. It's the same thing in BCI. So very low electrode count systems are able to enable a click on a computer mouse, maybe a few directions on a cursor. What our system is designed to enable is rich control of sophisticated applications, whether it's photo editing or productivity software. Our bar is really to meet and eventually exceed what people who are able-bodied do with a computer or a digital device.
Precision Neuroscience is not alone in this race, and the competition could not be higher profile. Perhaps the best known name in BCI today is Elon Musk's Neuralink, but their approach is fundamentally different. Neuralink fully implants their chip directly into brain tissue by a robotic surgeon. As of early 2026, 12 patients have received Neuralink implants. Then there's Synchron, also headquartered in New York, also connected to Mount Sinai. The company's Stentro device is threaded through blood vessels into position near the motor cortex, a procedure similar to a cardiac stent. The company has now implanted 10 patients and recently raised $200 million in a new funding round with backing from Jeff Bezos. Apple has also partnered with Synchron to integrate natively with iOS. So how does Precision position itself in a field against the richest people in the world and an Apple partnership?
Neuralink's approach involves penetrating into the brain. So they have a robot that is able to insert very thin threads into the brain. But upon insertion, there is some degree of tissue damage and neuronal death as a result of the implantation technique.
The reversibility argument is Precision's sharpest competitive edge.
Reversibility and upgradability, which are kind of two sides of the same coin, has been a fundamental design constraint from the very beginning. We think it's really important to ultimately drive adoption. If it were myself or my family, I would want to know that whatever was getting implanted, if for whatever reason I wanted it taken out, that's possible to do safely.
Welcome back to the show. You are watching this Monday afternoon edition of Taking Stock live from the trading floor of the New York Stock Exchange. Our next guest is the CEO of Polygon Labs. Please welcome Mark Boiron. They are, of course, blockchain infrastructure company behind Polygon. Mark, grateful for your time. Always like our conversation. So let's start with the news, because I know Polygon is very busy in terms of newly announced integrations and can't miss partnerships. MasterCard joining Visa, Meta, and Cash App on Polygon. What does it mean? Why does it matter?
Yeah, thanks for having me again, JD. Very excited to be here. Yeah, I mean, ultimately, look, blockchains were meant to be able to scale to the size of what payments infrastructure does today. And the only way to know that we're capable of doing that is actually having that payments infrastructure live on Polygon. So when you see a company like Visa that is able to settle on Polygon. When you see, Modern Treasury going live as well, same thing with Cash App, same thing with Meta. What this really tells you is that institutions are looking at blockchains and saying we can actually have confidence in settlement on the infrastructure, and being able to do that at 5,000 transactions per second, probably 2x in terms of like payments per second, really shows that blockchain infrastructure is finally here for payments in the way that we currently use that infrastructure.
Mark, why do you think so many of these companies are not only making the bets that they are making, but making them on Polygon?
Yeah, a lot of it really comes down to this scaling, right? Polygon's been around for, over 6 years now. And, we've processed over $2.6 trillion of payments. And so when you do that and you do it the scale at which we're doing it at hundreds of TPS transactions per second with the ability to go to 5,000 transactions per second, as an institution, you actually have confidence that you can do this at scale. When you think back to a few years ago or many other blockchains, what ends up happening is that you go live and then your transactions start increasing in price or start getting slowed down due to bottlenecks. And when we're actually able to provably show that we can execute at that speed and scale, institutions can come and have confidence that the user experience that currently exists and the confidence that they'll have in the finality of the transactions will still exist on chain as well.
Mark, I wonder what you're seeing in terms of stable coins right now, the current conversation, where you think it goes from here, and the backdrop of stable coins really having a very strong moment right now.
Yeah, so obviously there's not a single boardroom that isn't how they leverage stablecoins in one way or another to either make their money movement more efficient or their customers' money movement more efficient. And the simple reason is when you can take the time for cross-border transactions down from 5 days at sometimes 7 days, down to a few seconds or in some cases a few hours. There's a lot of savings there, whether that's trapped capital or whether it's just transparency for your customers and confidence they can have. And so when you get to that point where you see that, you start being discovering that you can leverage it. And in our case, what we see is that if you can actually make that easy to do, then it's something that we're going to see more adoption of. And that's something that we've been very focused on when we go from 8 to 10 different solutions that historically have needed to be integrated in a blockchain setting to be able to go live with stablecoins. And we can take that down to one in the way we have with the Open Money Stack. What that means is that instead of taking you 12 to 18 months to go live with a stablecoin solution, you can go live in 4 to 6 weeks. And going live in 4 to 6 weeks actually means that, instead of 200 to 400% increases in stablecoin adoption a year, you can suddenly see that taking off at multiples more than that, which is exactly what we're seeing in the market right now.
Mark Boiron, the only bad part about this interview is sadly it has to come to an end. Very grateful for your time, CEO of Polygon Labs. Come back anytime. Folks, watch at home. Don't go anywhere. A lot more Taking Stock coming up live from the big board right after this. Woo! That was, I hear him. Welcome back to the show. You're watching Taking Stock. Time now for a few headlines in the world of startups, raises, and rounds for your Monday afternoon. First up, The Journal reporting AI inference startup Base 10 finalizing a $1.5 billion funding round at a $13 billion valuation just 5 months after raising $300 million. Next up, crypto trading app FOMO. Yes, it's called FOMO, raising $75 million at a $550 million valuation to expand its social-first trading app and position itself as a future gateway for tokenized stocks and assets moving on chain. And finally, Observable Space raising $90 million. It's a Series A funding round and securing a U.S. Space Force contract worth up to $94 million to scale its optical telescopes and space domain awareness technology. That all sounds very cool. Speaking of Observable Space, the New York Stock Exchange's very own Ashley Mastronardi caught up with CEO Dan Roelker to talk all about that raise and their contract with the U.S. Space Force. Take a look.
In other news, the space sector has been gaining plenty of headlines this year, with one startup in particularly making plenty of buzz. Observable Space recently raised $90 million in Series A funding and also secured a $94 million contract from the U.S. Space Force. Co-founder and CEO Dan Roelker joins me now from the company's manufacturing plant in Detroit. Dan, welcome.
Thank you for having me. Excited to be here.
So excited to have you. What is that behind you? Tell us where you are.
Yeah, no, we're in our manufacturing facility out here in Detroit. We have, these are examples of some of our laser comm ground stations and enclosures. We kind of deploy these all around the world to support the commercial and defense missions for lots of different customers.
Incredible. You raised $90 million in a Series A round. What are you going to put the money toward?
Yeah, we really are seeing this very large explosion in laser communication, really from Earth to space and space to Earth. It's really driven by a very large kind of investment in capital going into data centers in space. Laser comm has to be that primary mechanism for communicating with these types of large constellations for data centers in space. So we have really starting to scale up our operations, manufacturing here in Detroit, and also our headquarters in LA to really support that need in the market right now. So super excited to be a part of the next space race here. And as we kind of say, the next space race is on the ground, since everyone needs to get these things deployed around the world.
And Dan, I understand you have quite an impressive resume in the space business, including 4 years at SpaceX. How has that experience helped you grow Observable Space?
Yeah, I think SpaceX definitely defines the future of how we're going to be building space technologies. And really, the fundamental mission of SpaceX is space exploration and multiplanetary, as Elon said on opening day. I think that vision really drives a lot of current and ex kind of SpaceXers. The way that we build those technologies, really first kind of principles based and really iterative approach to getting that technology up and demonstrated and understanding how things are going to work, definitely is driving how the U.S. Space technology market in particular and companies are building these systems for the future. So it's definitely a defining role, I think. Yeah.
All right, and I understand that your company, among many things, develops infrastructure allowing satellites and spaceships to navigate and communicate. What is the significance of that?
Yeah, so when you're putting things into space, you need to have sensors to understand what's around you. Primary mechanism for that is actually like optical systems. So we build a lot of optical systems that go on spacecraft, satellites, so that all those different types of systems understand what's around them. It helps them navigate. It helps them understand like how to go to different places within orbit. And also just understanding more like an intelligence aspect. What is around you? What are other things doing? It's really important, especially as space gets more heavily trafficked.
And we know the famous opening line from Star Trek episodes is space, the final frontier. What does that frontier look like to you in the future, Dan?
Yeah, I think that's with the SpaceX IPO just, the other week, and, a lot of investors, ex-employees, current employees, all kind of have a lot of capital coming in. I think that's actually going to be coming back into the space industry at large. And so the next 12 months, I think, is going to be really exciting to see what new companies, what existing companies really start to do for the broader picture. You know, it's won't just be defense and space, but kind of commercializing space and really starting to get into that broader vision of exploring space, you know, going to the moon, going to Mars. So those are all like extremely exciting things, I think, for us. So, you know, it's definitely a pivotal time for space right now.
All right, Dan Rollker, co-founder and CEO of Observable Space. Thanks for joining us on NYSE Live.
Thanks for having me.
And now Money 2020's very own Scarlett Sieber is back to explain all of the ways that fintech companies actually make their money. Take a look.
I'm Scarlett Sieber, Chief Strategy Officer at Money 2020, and this is how fintech companies actually make money, where culture shows up in the P&L. What does that mean? Well, let me tell you. Today we're going to be talking about Pleo. Pleo gives employee cards and gives finance teams oversight. So how does Pleo actually make money? First, interchange revenue. Second, subscription pricing for controls and insights. Third, behavior shaping, better compliance, fewer surprises. Expense tools aren't about receipts, although they feel like it at times. They're really all about trust. Pleo monetizes the middle ground. And with that, that is how Pleo actually makes money, by balancing autonomy with accountability. The two things have to balance out here, people. If there's a fintech company you want us to feature, drop it in the comments. It just might make the cut. In the meantime, back over to you.
Tomorrow here on Wall Street at 9:45 a.m. Eastern Time here on Wall Street, we'll get the latest figures for U.S. flash manufacturing and services PMI for investors to digest. In the morning, the latest quarterly results from Carnival Cruises, and after the close tomorrow, quarterly results from FedEx. Your final tail of the tape, the S&P 500 in negative territory, 0.4% today. The Dow up 0.3, and the Russell 2000 in record-setting territory. Its first ever close above 3,000. Thanks for watching today's edition of Taking Stock. Have a good one. We'll see you again tomorrow.